Welcome, learners, to today's lesson on financial literacy. We've already spoken about a number of things in class and terms that are going to keep you rather involved this term. Capital, assets, liability, income, expenses, profits, losses, budgets, savings, banking, financial records, and transactions. A number of these terms you will use quite extensively during your planning for your Entrepreneur's Day. Let's have a look at two of those terms. What is the difference between a liability and an expense? Now, according to the definitions that we've already done, a liability you could almost see as debt. Debt, current debt, long-term debt. And an expense is something that you would see as money that you're giving out for your business. Let's have a look at these definitions over here. A liability is something that a company owes at a future date. It could be paying an invoice for inventory, expenses. It could also be for loans and future payments for employees. So this is basically long-term debt. An expense, on the other hand, is a cost of running your business. It's the now. This is what happens now in the present. It could be products, material, labor, and expenses. It could even be taxes. Example, if you receive an invoice for electricity, that would be an expense. And a liability until you pay it. So the difference between the two, expense and liability. Liability would be something that you would really consider long-term, and an expense is something that you would consider short-term payments. Both of them, however, involve spending money. So one has to look very carefully at the way that you use both of these in terms of running a business. Let's look a little bit closer at the word expenses. If you have to look at your daily lives and the money that you spend, that could be considered expenses. So the first task I'm wanting you to do is to make a list of your possible expenses. Things that you spend money on a daily basis. Some examples of that could be bus fare, transport, lunch money, stationery money, money for book covers, money, for example, to go to the museum. The expenses. Those are current expenses. Things that you spend money on quite regularly on a daily basis. And then the other one at the bottom is make a list here of your possible income. Now I know at this stage of your lives there's not much chance that you're earning income. However, if you are getting pocket money, let's consider that income. Let's say you wash the car and you get some money when you do that, or you do some chores at home and you get some money for that. That can also be considered income as well. So those are the two things I'm wanting you to just do quickly. It's a short task. List of the possible expenses, day-to-day running costs, and then also make a list of your possible income. The next section of our work that I'm wanting you to look at today is your net worth. Now, these are the assets that you own. This would be calculated on their second-hand value. So, learners, if I have to look at the assets that I own, okay, it's going to be slightly different. I own a house, I've got a couple of cars. Those are assets. Those are assets. Then you're talking about computers and cell phones and appliances inside the house. Those are also considered assets. So have a look at your own assets. What do you have in your room that is yours, that you consider to be something of value? And then that would be added to your net worth. Remember, once again, it's calculated on their second-hand value. Then give a detailed list in a table of your current assets and use that to determine your net worth. Okay, I've got an example for you to have a look at. There you can see a general example of somebody's assets, a learner's assets. This is more or less the way I'm wanting you to set up the table. You can see at the top there it says assets, then it says rands and cents. So that would be over here, would be your second-hand value of these items that you're putting in here. For instance, if you've got a mountain bike, how much would it be worth now? Second-hand value. Cell phone, skateboard, tennis racket, cricket bat, clothes and shoes, airtime, savings account, and Xbox. Now, what you need to consider in a lot of these cases is your cell phone on contract or is it pay as you go? So in other words, does that cell phone belong to you or are you still on a contract paying that off? The same with any one of these items over here. So I've just taken two, for example, over here. Say I've taken the cell phone, which is on a contract. So that would still need to be paid off. So you'd have to consider how much you have on that contract and put that down over here as the value as to what is left that still needs to be paid off. And the same with the mountain bike. What is the value of that mountain bike that still needs to be paid off? By all means, you can put the second-hand value at the top here and the mountain bike value at the top here, but what still needs to be owed, you need to put down here, and that total of what is owed. Then, of course, you need to subtract that from your total net worth, which is adding all of these up here, getting a total at the bottom here, and then subtracting what you still need to owe from the total liabilities here. And what is left will be your net worth. Okay, learners, so here we have the end of our session for today. We hope you have enjoyed that. And remember, time is money. So we'll see you again next time. Ciao for now. Spend, give a little back.